Welcome to Investors Insights, episode number 125. Today we will be discussing the Fed's decision and can the rest of Washington make a decision going forward. Now, if you like what we say, let us know. If you don't like what we say, let us know. Don't hesitate to be shy. Come at us with your ideas and thoughts. We love the debate and dialogue. And I want to encourage you to connect with us on Facebook, Twitter, and LinkedIn. Links are on our blog. So let's jump right in and see where we stand following the Fed's decision.
I'm Greg Powell, and this is Investors Insights.
You're listening to Investors Insights with President and CEO Greg Powell and the Portfolio Strategy team at Five Plan Partners. 3, 2.
Hi, guys. So I saw you earlier this morning, had some nice heated debate. Didn't even have to have caffeine this morning. You guys woke me up pretty fast. So appreciate all the data and dialogue that we had. So let's start first here with Ashley. Ashley, in this morning's debate, you discussed that, rates didn't go up.
Right.
There's a lot of dialogue after the fact.
Correct.
You were quoting, I think, one of the Fed members.
I was.
You want to talk just a little bit about that, just briefly?
Happy to, Greg. We always like to take a backward look and kind of get inside the mind a little bit and what they said. And it's very interesting, very revealing. Greg is right. We were mentioning John Williams, who's the San Fransisco Fed president.
Right.
And one reason we like looking at the San Francisco Fed is after New York, it's the largest Fed district in the country and represents a large broad section. So we like looking at that. Mm-hmm. And we said this morning the summation of it was a little bit more, a little bit more, a little bit more. And what we mean by that is he said Fed needs a little bit more patience.
Right.
He said needs a little bit more data and a little bit more surety. So we thought that was very revealing. The compare and contrast we've given you is that he used the word remarkable, that we've had 2 to 2.5% domestic growth,
right,
driven by business and consumer spending. But in essence, you could tell that the international headwinds with China and others was just a little too much in terms of raising rates. They just felt like it was enough of a headwind not to do it.
Yeah.
And he said one final thing, the labor participation rate, he said, with the baby boomers beginning to retire, he said that is really helping us in terms of labor participation rate.
Yeah.
So he said a little more, they just need a little bit more firm data.
Sure.
But it was very revealing.
Here at Five Plan Partners, we're celebrating because all the way down to the final hour, we said rates aren't going up. And
that's right.
we're there.
Yeah. We killed everybody in the OK Corral. We talked about last week.
Absolutely. So here we are going forward. And Bobby, you brought up some great points as well about the Fed and all the data that we've got coming out.
Yeah, so now the Fed decision has passed us.
Yes.
Obviously, uncertainty will remain with us until we get some more clarity. But we have a busy week with some economic numbers coming out. Today we've got existing home sales. Also, the Atlanta Fed president speaks today, so maybe he'll have some clarity.
And let's talk about that because it's not so much, is it clarity or is it just to say, hey, we didn't raise rates?
More of an explanation.
But exactly.
And so to see if we can get anything else out of him.
This is why.
Also, tomorrow, retail sales numbers come out. Wednesday, manufacturing index comes out. Thursday, Janet Yellen has another conference.
She will be talking.
So we'll see what they're. Also, durable good orders and consumer confidence comes out Thursday. So it's a busy week for economic numbers.
Right, yeah. Janet Yellen's comments on Thursday, everybody will be watching, including us on that.
Yes.
Yeah. Talk about your data in regards to rates.
Yeah, so what was interesting to watch was that the market react to the Fed decision. And so historically, when the Fed's easy, the market likes that. And the market rallied up to the decision, and then once it was announced, it fell off. It's kind of a buy the rumor, sell the news situation.
Okay.
And the reason I think what Bobby said is uncertainty. It kind of led to that fall off, and people maybe just taking short-term profits. And so what we're watching closely is, will the Fed raise rates, and what are they watching? What they're watching is inflation through prices, inflation through wage growth, and consumer confidence is going to be a big factor. And so they can raise them in October, but I don't think anyone here thinks they're going to raise in October. After our discussions, based on the data, there's no huge swath of data between now and October that could change their mind. But between now and the end of the year, that's what the next possibility is, late December.
So we're going out on a limb to say, once again, rates are not going up in October based on the data that we're seeing. Right. Also, let's talk politics. Fed made a decision, but now we're getting ready to see if Washington can make a decision. Right now, Boehner may be up for the vote for the first time. Speaker of the House, Republican, this will be historic. There are those conservatives that are saying, you know what, John, we just think you need to be out of here. We need other leadership in the House. You throw in the Iranian deal, the highway funding project bill, also raising the debt ceiling. We've all had discussion here. We think Washington is going to look very chaotic, also disconnected from the rest of the economy and the public, and that's going to put additional pressure on the economy. You guys agree?
Completely agree. I mean, you look at Boehner, just the idea of him possibly being taken out of office midterm would make him lean more, maybe more, force him to put his feet to the fire to go more conservative, be more open to a debt ceiling, government shutdown. That's going to rile the markets.
Right, very much so. So we've still got a lot of tension and stress out there. We're going to keep you updated as to what we see, but there's a good chance we could raise more cash in the portfolio if the leadership in this country continues to appear to be dysfunctional, as well as the fact that the Fed, going back to what we were saying, the Fed's message doesn't come through loud and clear. Everybody in agreement on that?
Yes, absolutely.
All right, that's how we left our meeting early this morning, and that's how we're going to leave you. Keep in touch with us, because we're going to keep in touch with you. Like I said, we like the debates and discussions, and look forward to talking to you soon.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.